First Movers live from Davos, exploring how crypto is part of the conversation here at the World Economic Forum. And our next guest is Massey from Deloitte, one of the top accounting firms in the world, where he is a partner and digital assets leader in the area of global and U.S. tax blockchain. Rob, great to have you on the show.
Thank you for having me.
All right, so here in Davos, trust was a main topic of one of the panels that you joined yesterday. And the crypto and blockchain industry has lost a lot of trust over the last year. So I wonder, what are you doing at Deloitte to try to restore trust in the industry?
It's a great question. We have served this industry for 10 years, and we're very proud to serve the entire ecosystem. This is a complicated ecosystem. We have relationships between parties that are just all over the board. We have decentralized software applications, which people are building entire businesses on top of. And since we've served the industry for so long, it helps us understand it from all the different angles and helps us, to answer your question, design control and risk frameworks to deal with very advanced business models. These risk and control frameworks differ from legacy risk and control frameworks, industries we've had for decades. And so understanding the complexities here, companies are going into two different directions. One is saying, hey, given the events of last year, do we need to revisit some of what we've been doing, revisiting the risk and control frameworks in place? Have we been thoughtful enough? Have we gone down and looked at the supply chain? Who are the vendors deeply enough? There's another set of clients who are like, thank goodness we invested in that. That was a great money spent. That was great time spent. It's all hard and it's still evolving. And so we continue to focus in this area right out in front.
All right. And I wonder, Bank of America also says digital currencies, such as central bank digital currencies and stablecoins, are the natural evolution of money and payments. What are your thoughts on that?
Spot on. I believe that absolutely. Normal fiat currencies is a great method of payment. It's a store of value. It gets stuff done. But the ability to have programmable money, interacting with smart contracts, pulling out friction, and really helping large-scale enterprise elevate their business models to transparency, real-time payments, real-time rev splits with smart contracts is absolutely a step in the right direction. And this is absolutely the case, whether it's a stablecoin, whether it's a CBDC. They've all got this programmable component. It does differ, though, right? Not all stablecoins created equal. Not all protocols created equal that we're designing the smart contracts on top of. Mm-hmm. But it's absolutely where we're going.
Okay. Meanwhile, tax season is beginning. Yeah. Crypto is considered taxed as property.
Yep.
It can be a little challenging for folks to track all the trades that they're making and make an accurate assessment of what their tax liabilities are. Anything being done at Deloitte in trying to address the complications therein?
Yeah, I mean, we educate people as best we can. We serve clients all over the ecosystem. I think what should take some comfort in folks who do invest or trade or use digital assets in the space is that the reporting capabilities of those platforms that do allow transfers or use of digital assets, they're all advancing their capabilities to bring great reporting to the user base, right? Even before we're required to have it on a Form 1099, right? That rule got deferred, so we won't see it on a form yet. We don't yet have the Treasury regulations to define how they want to architect that framework. Nonetheless, those who facilitate digital asset transfers, you're going to see a lot better reporting capabilities to make it easier for you to get the right information you need.
Do you think U.S. tax law adequately addresses cryptocurrencies, virtual currencies on those IRS forms? And if you were to compare them to other countries, is there another country that offers better clarity?
Yeah, I think in the U.S. There's absolutely some clarity, but it's not possible to keep up with the pace of innovation in this space. And so, thankfully we have an active Congress who does have a caucus who's very engaged in trying to push clarity on rules. We also have a Treasury working to bring clarity through Treasury regulations of enacted laws or old laws that have been in place that didn't have digital assets as a framework. So I think the U.S. is doing what they can. It's tough at the pace of innovation, though, isn't it?
Absolutely. In fact, even last year, a lot of people lost cryptocurrencies due to the collapse of various crypto exchanges and businesses, or thefts even. And I wonder, what are the accounting rules around stolen crypto?
Yeah, it's difficult. We don't really have rules on point, but there are folks right now looking at their situation of last year or years past, and frankly, unless
do they pay tax on stolen crypto?
There are existing rules on fraud and theft, but very specific to the situation of those who were involved and the various parties. So it's a very fact-specific situation, but people are evaluating it right now.
You mentioned, the innovation is just going so fast with DeFi, NFTs, and such, and DAOs. How does the accounting rules keep up with that?
Yeah, we don't have much on point, but we do. Our clients in the space, we do engage actively in this space. You look at their specific circumstances, knowing that not all DeFi is created equal, not all DAOs created equal, even NFTs are different. So we look to say, what is the asset type? What is the protocol type? What is the relationship of our clients with that transaction, with that digital asset? And then, we build patterns and norms, compare that to existing laws, and try and make representations, recommendations based on that.
So what are your goals at WEF? What are you trying to drive home with the policymakers, government officials here?
Yeah, we are interacting more with enterprise than with policymakers on this front, and absolutely, we're watching connections primarily. Fascinating to watch how sustainability as a topic is interacting with blockchain digital assets at a protocol level. Whether it's helping enterprise enable greater transparency to sustainability matters, or looking at digital asset models and protocols and what does their carbon footprint look like compared to other transaction types.
How are you doing that in terms of the ESG, sustainability, et cetera? How are you trying to, improve that?
Well, many countries around the world now already have standards that they need attestations in their financial statements around, what does your sustainability look like? What is your carbon footprint? So we, as an audit firm, do have a requirement to get into that space. But we're watching it evolve. So other companies now saying, even if you're not falling under those requirements, is there something they can do proactively to show what their carbon footprint looks like? Or how can it be bettered? So what are we doing? We have a great sustainability practice that partners with our digital asset practice that says, okay, from a strategic perspective, looking at your goals, what can we do, cutting edge evolution to put you front and center from a competitive standpoint to make you that much more of a sought after protocol to build upon because you're green.